Yes, so these are bonds and treasury bills. So what is a bond or treasury bill? This is an instrument where the borrower, that's the issuer, pays regular interest to the lender, those are the investors, and principal payments until the bond matures. So mainly here is you lend the government your money, the government is the borrower. You are the lender, you lend the government your money. And you can lend the government your money for short term or long term. So when you talk about lending the government for short term, those are treasury bills. When you talk about lending the government for long term, those are the bonds. So these treasury bills and bonds have different maturities. So for treasury bills, you can lend the government for 3 months, 6 months, or a year. Then for bonds, you can lend the government for 2 years, 5 years, 10 years, and 15 years. And when you lend the government for this time horizon, you are getting interest on your money. The higher you keep the longer you keep the money with the government, the higher the interest you get. Now for like 3 months you can get like 6%, for like 6 months you can get for like 8%, and for a year you can get around 12%, and for 2 years, 5 years you get higher interest. So what's the benefit of you holding these treasury bills or bonds? First of all, the bonds and treasury bills offer a competitive rate of return compared to savings or fixed deposits. So about these treasury bills and bonds, when you lend the government your money, you get a higher interest than which a savings bank account would have given you, or a fixed deposit account would have given you. So you get a higher amount of money as compared to the savings accounts and the fixed deposits. And also, as it's a government security, it's almost risk-free and can be easily and quickly sold in the secondary market. So with these treasury bills and bonds, can reach a time, let's say you bought a treasury bill of 5 years, and you feel like you want to get back your money. You can always sell it and you can always get your money. However, there are some penalties if you don't finish the maturity. And in simpler terms, here when you lend the government your money, there's assured interest on your principal. Mainly here, to invest in these treasury bills or bonds, you need a minimum of 100,000 Ugandan shillings. You get back your money of 100,000 Ugandan shillings and an interest. And as you know, the government, it gets revenue today, night, anytime it's getting revenue, taxes. So it can't fail to pay you your money. So you get back your 100,000 and an interest as agreed upon. So measure these are the benefits of holding the treasury bills and bonds. Yes, let's go to the mutual funds.